Well, let's shift our focus to the auto sector now. First quarter earnings have started coming in. Bajaj Auto will be reporting its Q1 numbers today. It's expected to report a decent quarter. How will Q1 as a whole look like? Let's discuss this with Kapil Singh. He's auto analyst at Nomura, India, and he's joining us to take some questions. Kapil, good to have you with us here. Thank you for your time. Good to have you with us here. Just a quick word, Kapil, on stocks under your coverage. What are the broad expectations, and what are you really watching out for clues to kind of look into the future as well?
Sure. Good morning, and thanks for having me on the show. So, first of all, coverage universe as a whole is seeing a pretty strong earnings growth. So, revenue growth, for example, for the OEMs will be around 10%, but EBITDA growth will be somewhere around 25%. So, still margins are going up, and this is going to be a strong quarter as such. Similarly, for suppliers also, we are expecting EBITDA growth to be somewhere around 25 to 30%. But the interesting thing to note is that now the inventories in the for the OEMs have filled up fully, and there are in fact discounts and deals on offer as well. So what we would look for going ahead is what kind of inventory levels OEMs hold, and what is the demand outlook, because there is a risk that margins could start coming under pressure from the second quarter onwards. And also, we have seen a little bit of inch up on the commodity prices. So these will be the two key things to watch out for as the earnings seasons begins from today.
So higher discounts, I mean inventory levels, right? Which kind of, and you said that from Q2 margins could come under pressure, and higher commodity prices, input prices. Which are companies most at risk from the first point? Higher inventory and discounts, and to the point that you're saying that from Q2 onwards, margins can see meaningful pressure. Is that already the base case in stocks, or you think that's not really in the price right now?
No, I think it is to some extent factored in, because industry bodies like FADA, for example, has talked about it, and SIAM has also acknowledged it. So I wouldn't say it's not there in expectations, but sometimes, if the inventory is too high, the discounting can overshoot. So these will be the risks, I would say, to watch out for. And it depends on how July, August, September kind of period goes as well. But what we are starting to notice is that industry growth has fallen to mid-single digit or low single digit kind of levels. And what that means is that overall, industry is not growing high, whereas all the players are looking to gain market share. So there will be some kind of increase in discounts that I expect. Some of it may be visible in first quarter, and some more visible in the second quarter. I would say that OEMs who manage inventory well may not really see this risk. But if they are not able to bring down inventory quickly, then there will be no option but to increase the discounts. So I think across the board, we are seeing all the OEMs increasing either discounts or reducing prices. We have seen, for example, Mahindra and Mahindra, Tata Motors also reducing prices, but rest of them are increasing the discounts. So it's in some way addressing demand problem, and in some cases inventory problems.
Okay. Hi, Kapil. Good morning and good to see you in. This is Nigel on this side. Let's focus on the two-wheeler space. I'm just looking at your top recommendations. You're still positive on Bajaj, while you're not so positive. I think you have a reduce on Eicher, and you're neutral on TVS Motors. What are the expectations out there? And is that reduce on Eicher because of valuations, or do you expect growth to be relatively lower?
Yeah. So Bajaj Auto has been our top pick, and we are still maintaining that. They've been doing a lot of interesting things. I think besides the core business, where the portfolio has shifted more to the 125cc and above segment, which has seen higher growth, they have also done quite well in the electric two-wheeler space. And what we notice is that the volumes are ramping up pretty nicely as we see, for example, the month of July. They are already getting into mid-teens and closer to other leading players like TVS. We saw the launch of the CNG bike, which is another interesting proposition. And we are hoping that that product can also gain traction as we go forward. As far as some of the others are concerned, I would say particularly Royal Enfield you asked, I think the issue is of growth. We feel that at the level of valuation where it's trading, the growth may not be strong. And there will be some more some more market share pressure that could continue going ahead as well. Because we will see players like Bajaj Triumph and Hero Harley continuing to ramp up, and that could put more pressure on growth going ahead as well.
M&M is your top pick in the automotive space. Recently, M&M share price came under pressure after that impetus for hybrid cars, a move which will benefit peers like Maruti. It's happened only in one state of Uttar Pradesh, but M&M stock corrected. Is this, how big a risk is this for Mahindra and Mahindra?
So look, I think as far as our assessment is concerned, we'll wait for a direction from the government on what the final implementation of the policy is going to be in Uttar Pradesh. I don't think the finer details are out as yet, but as we noted that it is, it's just one state which has implemented this policy, and even there are discussions undergoing that there may be some price limits, etc., as well, which could be imposed. So we'll wait for the final policy. But our assessment is that there are significant incentives or policy support for electric vehicles, and I do expect that to continue. So we have the PLI schemes for automobiles, auto components, for batteries, and I think taxation policy that India has is also very supportive. So now from next year onwards, we will start seeing cars coming out from all the players, including M&M. And I think we will see a pickup in electrification from 2025. At this point, the policies which are there, or the taxation policy which is there in particular, doesn't look, from the central government, doesn't look very supportive of hybrids. So that's the reason that we are not expecting hybrids to really gain share in India till there is any significant change in policy. So I think if you ask me, what I would watch out for is how the electrification picks up. I, at this stage, don't feel that hybrids will gain share with the current policy framework that we have.
Got it. Kapil, we'll leave it there. And thank you very much for running us through what you're expecting from Q1 and, of course, other allied industry issues as well. Kapil Singh, auto analyst at Nomura India, with perspective on the sector and specific names as well. We'll